Welcome to Daybreak Australia. I'm Haidi Stroud-Watts in Sydney. We're counting down to Asia's major market opens.
I'm Annabelle Droulers in Hong Kong, and the top stories this hour. A flat lead-in for Asia with US stocks hovering near all-time highs. JP Morgan falls as CEO Jamie Dimon tells investors the bank won't buy back a lot of stock at current prices.
Nvidia gaining on a bullish analyst call, setting a high bar for its highly anticipated earnings report. We hear exclusively from the CEO, Jensen Huang.
Plus, succession in focus for major Middle East rivals after the Iranian president's death and ill health for the Saudi king.
Certainly a lot for investors to contend with when it comes to the risk assessment out there. But to take a look at the setup here in Asia, we're seeing downside across the board in futures trading going into the start of the cash session in about an hour or so time. Sydney futures down by about 0.1%, looking pretty listless if I'm fair to characterise the market mood at this point. Chicago Nikkei futures also seeing a bit of weakness there as well. A pretty cautious setup from Wall Street. We are, of course, waiting for Nvidia numbers out on Wednesday. Really the crux of the AI frenzy that's been powering this bull market. Can it sustain another leg further? But we are seeing futures pointed to some mild losses there in Hong Kong, a bit of a dip in Australia, but perhaps a little bit of a gain in Japan once we get started. But remember, we're still trading pretty close to near all-time highs for a lot of these major markets, Belle.
Yeah, that's right. It was pretty much the same story in the US session overnight. We had US stocks just, again, sitting around these multi-year highs here. Treasuries just edging a little bit lower in the session here. More Fed speakers on the ticket, really just reiterating this wait-and-see approach on rates. And we're going to hear from the Cleveland, the Atlanta Fed presidents in just a few moments from now. That really has been driving the market narrative of late. But that shift, again, as you say, Heidi, it does come back to earnings over the course of this week. And really, perhaps just one stock in particular, that is, of course, Nvidia. It's the last of the big tech names to report, and investors really waiting for any sort of evidence and the guidance as well from Jensen Huang that we can see that optimism around AI persisting here, and whether there's that continued insatiable demand for AI chips. But ahead of Nvidia's numbers, we actually heard from CEO Jensen Huang, and he spoke to us exclusively on the sidelines of the Dell World Conference, where the two companies, we also heard from the CEO of Dell as well, touting this new AI partnership.
It's not about just delivering a box, it's about delivering an entire infrastructure. And that entire infrastructure is insanely complex. The last 30 years, both of our companies have changed a lot.
All our new PCs will be AI PCs, right? And the reason is that anything that you're doing that has an edit prompt is going to be sped up because every software developer in the world is figuring out how to use all this new power in the GPUs and the NPUs.
That was the Dell CEO, Michael Dell, and also NVIDIA CEO, Jensen Huang. And let's bring in our first guest. Ron Temple is Chief Market Strategist at Lazard Asset Management, joining us this morning from our Tokyo studio. And Ron, so much of the rally that we've seen over the past few months has been predicated on tech, big tech in particular, AI, that focus. Do you see that persisting ahead of NVIDIA's numbers this week, or do you think valuations are really becoming a problem right now?
Well, when I look at the AI phenomenon, I tend to step back and say, okay, let's look at the biggest economic disruptions of our lifetime. And in my view, there are two of them that are underway right now. One is AI and the automation that allows for the global economy. And the other is the energy transition. And you could argue in some ways they're actually in conflict with each other. But I do think there's still runway for this story to play out. My suggestion, though, is for investors, we really want to start thinking about what are the second and third iterations of the AI story. We've had enormous gains in a small part of the market, but who are going to be the next companies who can capitalize on this opportunity, which I would view, by the way, as another facet or extension of what we've been talking about in automation and even robotics historically in terms of trying to increase efficiency in the economy.
Yeah, talk to us more about those second and third iterations. And also, I think it's interesting that you bring up energy usage as well, because storage, for instance, has been one of the key areas. Where are you looking to play the theme then?
Well, I guess I think the key issue here is there are kind of different facets of AI. One is who are the users of the products and services going to be? And one of the keys for the earnings growth of these big tech companies to be sustained is their customers actually have to realize a return on investment, right? If you're a major corporation and you're spending hundreds of millions of dollars on building that infrastructure for AI, you need to see early signs that there will be a payoff. It could be competitive advantages, it could be market share, it could be margins, but they're going to need to see that. And so I think it's important to focus on which companies are doing this most intelligently and which ones are going to secure a longer-term advantage. And it's very hard to read that right now. So a lot of that is really conversations with company managements and assessing their strategy. But then there's also looking beyond that and saying, whether it be public markets or private markets, what other companies are going to come out of the woodwork, so to speak, and basically capitalize on that infrastructure once it's built. And I've been trying to think of parallels back to, say, the 1999-2000 era, where initially a lot of the focus was on companies like Cisco Systems and on Sun Microsystems, but then there ended up being dozens, if not hundreds, of companies that profited on the back of those rails, you might say. And so I think that's one facet. And then, as you mentioned, the power consumption, there's going to be enormous demands on the grid, on power availability globally. That might be another opportunity to play this.
Ron, do you think we have good visibility over what those, sort of second stage, third stage, certainly later stage companies to benefit will be?
No, I think it's really early. I mean, all I can say is I can make kind of broad assertions in that I think this, again, will transform many parts of the economy. It could be everything from when you go through a fast food restaurant and order at a drive-through window to drug testing to see the efficacy of new compounds or the effects on cells from new biopharma products. It could also affect the financial service sector. So I think this is the big challenge right now, is we're so early in the game. I mean, if we're really honest, this phenomenon is something no one was talking about very much, even 24 months ago. It's really more of the last 18 months that this has been front page in the headlines. And so I think it's early. It's a difficult task. But I think that's where the real opportunity might be over the next, say, 3 to 5 years. And that's not to say, by the way, there's not more opportunity in the big providers in the tech universe. I think there's still some pretty significant earnings gains. The key challenge there is, can those gains exceed already high expectations? And we'll be watching carefully this week to see, at least in the case of NVIDIA, if they do.
Yeah, and the cost of funding remains a point of uncertainty, right? Particularly when it comes to these really growthy stocks. We did hear from Cleveland Fed's Loretta Mester about the rate trajectory. Let's take a listen.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up.
That was Loretta Mester there, of course, talking about this high for longer narrative. So, Ron, does that sort of sit with where you're seeing Fed rate hikes? Because I noticed that you were thinking perhaps we could see something as early as mid-year.
Yeah, so, I mean, my base case is that I do think there's a strong case for the Fed to start cutting rates at the September 18th meeting, but there's still a chance that they might be able to cut rates as early as July 31st. And the premise or the base for my view here is that when I look at inflation over the last 2 to 3 years, there is a clear deceleration of inflation. And in particular, in the second half of the last year, if we look at the Fed's preferred inflation index, the core personal consumption expenditure index, that index for the second half of 2023 was below 2%. We had the nasty surprise in the first quarter of this year with PCE and CPI running at much hotter levels. But I was very encouraged by the April report on CPI last week, which came back down to levels more comparable to the fourth quarter. And so I think between now and July, obviously we'll get 2 more inflation reports. By September 18th, we get 4 more. I'm hopeful that we get 2 to 3 rate cuts by the end of the year for the Fed. And probably more importantly, to your point about the cost of funds, it's probably less important when the Fed cuts rates the first time, and more important, how far they cut rates through the easing cycle. In my view, the easing cycle is likely to end somewhere around 3.5% on Fed funds, which is higher than I think many other investors might be expecting. And my logic is the Fed will be cutting rates because inflation is slowing, not because of economic weakness. I do think there will be some deceleration in economic growth in the U.S., Again, those long and variable lags in monetary policy are still hitting the economy, but I don't think the Fed will feel the need to take rates down to 2.5% to 3%. And if that's the case, fair value on the U.S. 10-year Treasury yield is probably in a range between 4% and 5%, which means you're not going to get a lot of relief at the long end of the curve.
Ron, obviously the Fed tech earnings really dominating the momentum when it comes to what we see from market sentiment coming up next. But I do wonder how much you're watching international developments as well. When it comes to some of the efforts out of China to shore up the property sector, do you think this is meaningful enough to be able to make a difference to how markets perform from here?
Well, I've believed since the beginning of the year that China could actually end up being one of the strongest equity markets globally in 2024. And my logic there, by the way, was the economy is weak. We know that. The housing issues are deeply ingrained at this point in China, and I think they're going to take another 1, 2, 3 years to work out. But sentiment was so negative on Chinese equities. The market was by far the cheapest major market in the world, that there was quite a bit of room for upside. And we've seen a significant rally off the lows in February. I think there's still more upside in China, but I would caution that this is more of a rent, not own, or a better described as a trade. And when I look at the Chinese equity market, again, I think the real challenge is the underlying economic story is not particularly bright. The announcements last week, in particular on Friday, I think are a strong step in the right direction. But the government announcement, for example, that the PBOC would provide 300 billion renminbi for relending to fund 500 billion renminbi of purchases by SOEs of completed but unsold housing is a good start. But the analyses I've seen indicate we might need 3 to 4 trillion renminbi to take the excess housing supply down from 20 months to 12 months in China. And I would also note the PBOC had announced a similar facility before. There was 100 billion RMB, and so far only 2 billion of that facility has actually been used. So it's not clear. The details aren't there. It's not clear what the take-up will be on this funding. And so, again, I appreciate that the government is acting, but we'll need to wait and see if this actually leads to housing being absorbed, taken out of the supply, moved into public housing, and starting to resolve some of these issues in the housing market.
Ron, really great to have you with us as always. Ron Temple, Chief Market Strategist at Lazard Asset Management. We'll have more from our exclusive interviews with the NVIDIA CEO, Jensen Huang, Dell Chairman and CEO, Michael Dell, and ServiceNow Chairman and CEO, Bill McDermott, a little bit later in the program. Plus, we'll be live to Perth for this year's Australian Energy Producers Conference. Bloomberg's Paul Allen is there for us. So, Paul, we were just talking about the opportunities in the global energy transition. What are you focusing on there?
Well, pretty soon this hall behind me is going to fill up with 2,000 delegates. There's 140 exhibitors here as well. The theme of this year's conference is delivering the new energy economy. So Australia's oil and gas royalty will be here to discuss that. It does kind of seem like an oxymoron sometimes, but these conferences have been dealing with that theme a lot in recent years. Carbon capture, storage, hydrogen, and of course the role of gas as a transition fuel. It also fits with what we heard from the government in last week's budget in its future gas strategy. Part of the plan is to help Australia become a critical minerals processing hub. That's going to require energy, so there's a big role for gas here. But of course, prices are still very high. LNG prices are at levels we haven't seen since January. Meg O'Neill, the Woodside CEO, is going to give a speech to this conference a little bit later on, and she's just going to be hitting that theme: supply, supply, supply. And I'll be talking to Meg O'Neill a little bit later on this afternoon.
Well, coming up next, Iran calls elections as a death of President Ibrahim Raisi adds a new layer of uncertainty to the existing turmoil in the region. This is Bloomberg.
India decides. As the votes come in, can Prime Minister Modi win a third term? And what direction will India take next? with a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Huslinda Amin is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage starts June 3rd on Bloomberg Television. Context changes everything.
Well, power transitions in the Middle East are in focus after the death of Iranian President Ibrahim Raisi. Meanwhile, in Saudi Arabia, King Salman bin Abdulaziz's health is being closely watched as he receives treatment for a lung inflammation. Bloomberg's Michael Heath joins us to put all of this into perspective. And, you know, these are sort of unexpected developments in a year that has many unexpected developments for this region. So just adding to the sheer amount of uncertainty.
Yeah, I mean, uncertainty is really it's a perfect word for it, Heidi. I mean, in a sense, the Iranian president he's not a powerful position in itself. Obviously the supreme leader, the Ayatollah Khamenei, is the focus of power there. But it does open the question of who succeeds the supreme leader, who's in his mid-80s, and at some point there will be a transition there. The talk now moves to his son, which would be unusual because it's not meant to be a hereditary system, and obviously the Iranian Revolution in 1979 overthrew a monarchy for this sort of reason. So it does raise some questions there. The idea or the notion that perhaps someone more liberal would be installed, it seems very, very unlikely. This is a regime that's almost, you don't want to say it's at war with its own people, but relations are very poor. I mean, 60% of Iranians are under 30. There's just not enough work. These sanctions just make it very, very difficult in the economy. And this theocracy, you know, and a lot of older men there, sort of almost a gentocracy in some respects. They're interested in fighting a regional battle, not interested so much in their people's welfare other than to keep them quiet and keep them on side. Then you've got Saudi Arabia, of course, and again, the implications aren't quite as strong as they might seem. I mean, MBS, the Crown Prince, has been basically running day-to-day affairs since 2017, but he did cancel his trip to Japan, obviously, so things are fairly serious with his father, who's got a lung inflammation, who's also in his late 80s. So the other interesting point is obviously recently China brokered a restoration of relations between Iran and Saudi Arabia. Most analysts think that won't be affected by the power transition, but again, it's uncertainty, and we've got some nice reporting actually on the terminal, which just has Israel saying, an Israeli analyst saying, it's important to know who you're up against, and this uncertainty again about who will come in as the president of Iran, or will MBS change course in any way, that we just have to wait and see how it pans out.
Yeah, it certainly adds a fresh layer of uncertainty to the Israel-Hamas war. But what else could really inject a level of uncertainty is the actions of the chief prosecutor of the ICC.
Yeah, I mean, it's an astonishing decision, really, Annabelle. I mean, an arrest warrant, they're recommending that be issued for Prime Minister Netanyahu, for Defence Minister Gallant, as well as Hamas's head, Sinwar, its military chief, as well as some political officials there from Hamas as well. And I don't think this does a lot of good for the ICC's credibility. I mean, to put Netanyahu in the frame as someone who, with Sinwar, who launched an attack that murdered 1,200 innocent people, that involved sexual assault as a weapon of war, that abducted these people, that has almost welcomed the Israeli attacks on Palestine despite all the deaths, because it just strengthens his cause internationally. This is a person with absolutely no concern for human life. And to put a prime minister, a democratically elected prime minister, on the same level as that, it almost speaks to not being able to defend yourself as a country. I mean, whatever Israel did in response to that attack, it was going to lead to civilian death, because we're talking about a built-up area. So the ICC is almost saying, well, you can't do anything in response. And we saw last year when they indicted Vladimir Putin. I mean, that Russia was abducting children from Ukraine and Russifying them. I mean, these are crimes of war. What Israel has done, a lot of it is the fallout from war. Whether you're for or against that regime, this is just conflict involves civilian death, and it was a reaction to an attack. So it really is a worrying sign, and it's a bit of a concern for the ICC's credibility, and it had gradually built itself up as something to be aware of for leaders such as Putin or others who've been involved in war crimes, and to now put out an arrest warrant for Netanyahu, it undoes a lot of its good work, I think.
Yeah, and to note as well, a panel of International Criminal Court judges will need to consider whether to accept that application from the ICC's chief prosecutor. But that was Bloomberg's Michael Heath there, and we'll have more to come on Daybreak Australia. This is Bloomberg. JP Morgan CEO Jamie Dimon says the bank is well on its way with its succession plans. He says the timetable is not 5 years anymore after he was asked about how long he would remain as CEO.
I have the energy that I've always had. That's important. I think when I can't put the jersey on and give it full thing, I should leave, basically. The board probably, it's up to them at the time. Will I stay as chairman for a while? We'll see. But I think and we're on the way. I mean, we're moving people around.
For more, Bloomberg reporter Bree Bradham joins us from New York. And Bree, Jamie Dimon's been in this role since 2006, but he's long said 5 more years would be the case for a succession here, or how long he would remain in the role. But this is a pretty big shift in tone then, and commentary.
Well, yeah, like you said, it's what we got at Investor Day today was just a shift in the tone and a shift in kind of the context that he's giving about how long he expects to stay in this role. So on Monday, JP Morgan hosted its annual Investor Day in New York, and speaking to this room full of investors and analysts, Jamie Dimon got a question from analyst Mike Mayo about, kind of his plans and where succession might go. And instead of kind of using that phrase that he's often kind of jokingly used of, 5 more years, he very decidedly said not 5 more years anymore. And that the bank is, like you said, well on its way with succession planning. And so he ultimately said, that obviously this is up to the bank's board, and that he still has the energy that he's always had. He used kind of the alliteration of putting on the jersey every day, and still feeling up and excited to do that. But this definitely just brings into question kind of the timeline that we'll see for the potential succession there.
And Bree, we saw quite a reshuffle in the senior ranks. Is that the sort of preparedness that he was alluding to? Because he said that, the process is well underway.
Yeah, that's a really good question. I mean, obviously, if you're thinking about a CEO leaving the role, the next question would be who would be next up. So one thing that was really key for Investor Day today was hearing from all of JP Morgan's top lieutenants, so the folks that report up to Dimon. Some of the people that we heard from today include Jennifer Piepszak and Troy Rohrbal, who recently stepped in to lead an expanded commercial investment bank, as well as Marianne Lake, who had co-led the Consumer and Community Bank alongside Piepszak since 2021 and now has sole control of that segment. So we heard from all 3 of these folks today. They gave quite long and detailed presentations about, their segments. And those are 3 names that are definitely kind of in focus, but obviously there's not an exact timeline yet.
That was our Bloomberg reporter, Bree Bradham, there in New York. Thanks so much for your time this evening. And to note as well, JP Morgan, one of the big laggards in the session, given that we heard Jamie Dimon as well saying no plans for any sort of share buybacks with prices at these levels, so a drop there in the stock. But broadly, we had equities trading around their multi-year highs. A lot of anticipation ahead of these NVIDIA numbers that are coming out later this week. Can we see that momentum around tech, around AI extending? That's certainly the big question facing investors. We also hear from a lot of different Fed officials reiterating that case for the need for keeping rates high for longer. But here you're seeing that last close for JP Morgan down 4.5%. We'll have more to come on Daybreak Australia. This is Bloomberg.
Renewed focus on power transitions in the Middle East with the death of Iran's president and the ill health of the Saudi king. Roger Shanahan is an independent Middle East analyst and joins us now. Roger, always great to have you with us. And you, to paraphrase someone else that we spoke to in our reporting, you want to know who you're up against, right? And I guess that level of uncertainty is always interesting from an analysis perspective. Do you think either of these potential leadership shifts also portend to changes in policy or positioning at all?
No, listen, I think continuity is going to be the order of the day here for a couple of reasons. First of all, the president and the foreign minister really don't set the major foreign policy goals for Iran. That comes out of the office of the supreme leader. And anybody who replaces those two positions will essentially do the same. So one thing the Iranian regime wants is stability as much as possible. And so the replacements for the current president and foreign minister will reflect that.
But, you know, as many have pointed out, Raisi was a top contender for being the next supreme leader. Do you think that casts some uncertainty in terms of how that role is filled, potentially as the suggestions that perhaps his son might step in, the supreme leader's son may step in?
Yeah, certainly. That's the $64,000 question at the moment. Even prior to his death, the idea of front runners is fraught with difficulties when we're talking about the succession to the supreme leader's position, because it's only happened once previously. So the system is immature and relatively untested, but without a doubt, Ibrahim Raisi was being put in the appropriate positions that would have made him a strong candidate to be the supreme leader. With him now gone, that's thrown the conservative factions into a degree of disarray, because it wasn't foreseen, obviously, and so they'll have to come up with their own candidate. Who that is, I think we'll find out a bit more over the coming months, but it will certainly has thrown the cat amongst the pigeons.
Some of the people we've spoken to, Roger, have said that the idea of a dynastic rule in the country has been sort of eschewed following the Iranian Revolution. Do you see that complicating then whether the leadership has to try and argue against that approach now, or whether it complicates the supreme leader's son also being nominated?
Yeah, listen, it'll certainly be a consideration. As has been pointed out, the last thing that you want to do after half a century nearly after overthrowing a dynastic rule is then have the son of the supreme leader take over that position, particularly if his juristic or religious qualifications aren't of the same degree. But we saw with the advance of the current supreme leader that you can always make exceptions if it's in the best interests of the stability of the regime. So while the idea that Mujtaba would take over as supreme leader presents a whole range of complications, it's certainly not out of the question if those closest to the centre of power, including the supreme leader himself, believes that that is the best option for the stability, future stability of the regime, and they will just work their way around the justification in this instance if they believe it to be the best option for them. But without a doubt, it would be complicating for that to occur.
And do you see leadership change in Iran and also possibly in Saudi Arabia? Do you see that injecting any further instability into the Israel-Hamas war and the outcomes there?
No, listen, I think we really have to separate those two issues. In Saudi Arabia, Mohammed bin Salman has effectively been running Saudi Arabia, so there'll be a great degree of continuity with the death of the king, if that was to occur. And MBS has also been in direct communications with the US about potential bilateral agreements. The US has floated the idea of Saudi participation in some future security force. So those kind of issues are already being addressed with Mohammed bin Salman as we speak. As far as Iran is concerned, I don't see any real change in their foreign policy outlook at the moment. They sense that events favouring them at the moment, and their asymmetric way of engaging with the region will continue for the foreseeable future, regardless of who's in the positions of authority.
It was just a few weeks ago, April 14th, in fact, where we saw, what we would have expected as being red lines being really tested between Israel and Iran. With this leadership change, I know that continuity is expected, but do you expect this, idea of the shadow war to basically continue and potentially more volatility on the front?
Yeah, listen, I don't. The idea of this shadow confrontation will continue for the foreseeable future. It will recede at various times and it will peak at other times. We're seeing a peak currently, but we also have to remember that unprecedented aerial attack launched by Iran against Israel was in response to provocations from Israel in terms of an attack against senior Iranian military and IRGC personnel in the Iranian diplomatic compound in Damascus. So they felt that a red line had been breached, but their response was very well calculated insofar as it was a massive and unprecedented attack, but they forgave the element of surprise, and they made sure that sufficient notice was given that the attack itself could be thwarted. So in this very strange and bizarre way of resetting red lines, I think we've seen that in the recent past, but those red lines have been reset, and I think we'll just see a continuity of this shadow war for the foreseeable future.
Roger, always great to have you with us. Roger Shanahan, independent Middle East analyst, joining us. And of course, a lot of this expected to continue weighing across the commodity space, in particular oil. But it's interesting, we actually had a bit of a shrug when it comes to the impact on the crude markets. In fact, that dip in the early part of the week really being sustained as we see New York crude still sitting under $80 a barrel there. And really this range-bound situation continuing to show that traders are looking more ahead to the OPEC Plus meeting in early June for supply policy, even though we are expecting just a rollover of the existing curbs and settings there. Iron ore is a good news story there. It seems we're getting pretty close to that $120 level again. And even as some of the Chinese policy measures on the property market were deemed as disappointing by investors, it seems like they were forceful enough to create some more demand and optimism when it comes to the steelmaking ingredients, suggesting that we could see that housing glut see some improvement. Also watching copper, of course, continuing to extend this rally just under that $11,000 level there, which is sort of that record high. But we have seen investors just continuing to pile up bets on the prospect of supply shortfalls. More ahead on Daybreak Australia. This is Bloomberg.
We're taking a look at the energy sector now, and Bloomberg NEF sees a hotter than usual northern summer pushing global energy demand higher, with China's LNG requirements alone set to jump by almost 1/5 this year. Let's get more with our LNG analyst, Abhishek Rohatgi. And Abhishek, big focus, of course, on LNG demands, and just talk us through those forecasts that you're predicting.
Thanks for the question. So China's LNG imports are looking quite strong so far this year, and we think that China is on track to absorb roughly 80 million metric tons LNG this year. And there are a few key drivers of this. First is better than expected GDP growth. China was able to achieve above 5% GDP growth rate in the first quarter as compared to the more moderate 4.5% growth rate that we were expecting at the beginning of the year. So this is likely to support growth from the industry sector, whose gas consumption is closely related to the economic growth. Then lower spot prices are also contributing to the strong LNG imports, and this is true especially for the transport sector that saw healthy growth due to attractive economics of LNG trucks versus the diesel counterparts. Other factors are weather related. So China has started summer with above normal temperatures, which is raising demand for cooling. And the last factor I would like to mention is lower resales of the contracted cargoes this year due to reduced arbitrage of resales. Hence, more such cargoes are now coming to terminals in China rather than being sold elsewhere.
So there's a number of new supply projects set to start in the second half of the year. So how much does that impact supply growth for the remainder of summer?
So we continue to hold the view that LNG supply will see limited growth this year despite the startup of new projects. Overall, we are expecting supply to be roughly 202 million tons this summer, which is only 2 million tons higher than last year. And on an annual basis, we are expecting that total supply will rise by only 7 million tons, which is less than the growth seen last year. So most of the supply growth is happening in the fourth quarter as new projects in the US contribute more volumes. So we are assuming the startup of projects like Plaquemines Phase 1 in the third quarter and Corpus Christi Stage 3 in the fourth quarter. And one of the key reasons for the lower supply growth is the reduced feed gas flows we have seen this year in places like Egypt and Nigeria. And then sanctions-related output reduction in Russia is also impacting the growth.
And Abhishek, what about the market implications here? Because I think we just showed a graphic taking a look at Asia spot LNG prices rising. So what about that? But then also the competition between Asian and European buyers as well.
So on a fundamental level, market sentiment is still bearish, primarily due to weak demand in Europe and healthy inventories across North Asia and Europe. We are projecting underground gas inventories in Europe to reach close to tank tops by November under current spot prices. This is likely to continue limiting the competition for flexible cargoes in the market between Asian and European buyers and keep downward pressure on the JKM prices despite limited growth in LNG supply this year. However, we will also see some support to prices despite these looser balances as there is nervousness in the market and it is likely to continue because of the possible unplanned supply outages, hot weather, and the geopolitical tensions. So, for example, we have seen that loss of supply from the unplanned outages in Australia, Malaysia, and the US have supported prices in the April to May period.
Bloomberg NEF LNG analyst Abhishek Rohatgi there. More to come here on Daybreak Australia. This is Bloomberg. Annual conference of Australian oil and gas explorers and producers is underway in Perth as the industry grapples with the transition to net zero emissions. Australia Energy Producers Chief Executive Samantha McCulloch joins us from the event now. Samantha, great to have you with us. And I'll start off by asking, I guess, what is the mood at this event, right? Is there more focus on the opportunities that this global energy transition potentially, brings about? Or I guess potentially there's also some of the concerns about the risks that are being thrown up as well?
Yeah, well, we're just getting underway here in Perth at the Australian Energy Producers 2024 Conference and Exhibition. This is one of the largest business conferences in Australia. We're expecting well over 2,000 delegates through the doors over the next 3 days. And really, it's a fantastic opportunity for the industry to come together to share the latest innovations and technologies, but also to discuss those issues that are really important for the industry, for our role in terms of the transition and our role in the region in terms of being a reliable supplier of LNG to Asia.
So in terms of the current policy settings for Australia, do you think that's sufficient to encourage new levels of investment?
Well, there's no doubt that we've seen a number of reforms and changes in the policy and regulatory environment here in Australia in the last 12 to 18 months. But just a week or so ago, we had the federal government release the Future Gas Strategy. That was unambiguous in terms of the long-term critical role that natural gas will play in the energy mix to 2050 and beyond. That includes here in Australia, but also in terms of the role of LNG in the region. So we really very much welcome that sort of reset of the policy environment. We're now looking as an industry to work with the government to ensure that we can get the investment that we need to bring on new supply for the domestic market, but also for our international customers.
Yeah, and speaking of those international customers, Samantha, we've heard concerns from the likes of Japan, South Korea, big buyers of Australia's LNG, concerned that their contracts won't be honoured. So do you think these policy changes are enough to sort of alleviate those fears?
Well, we share some of the concerns of our regional trading partners. It's imperative that those LNG export contracts are honoured. The industry is working hard to ensure that we remain a reliable, stable supplier of LNG. We know how important our LNG is to keeping the lights on in Tokyo, to fueling manufacturing in South Korea, and it's key that we have the stability now in the policy settings to bring on those new investments that are needed and to reset that relationship with the major investors.
And then you've got projects, of course, from the likes of Qatar, the US. They're going to be able to deliver LNG at a lower cost. So is Australia going to be able to stay competitive on an international scale as well?
Well, there's no question that we're heading into an era of intense competition in LNG markets. You can see that the US, Qatar are really doubling down on their investments in LNG. It does reflect, though, the important role that LNG is going to play in terms of the transition, particularly in the region. And for Southeast Asia, you know, the International Energy Agency is projecting as much as a tenfold increase in LNG demand. Australia is really well positioned to be able to supply that LNG to the region to support not just energy security in these economies, but the transition away from coal and towards net zero.
What are your views on Australia's potential role for carbon capture, particularly serving the rest of industrialised Asia?
Certainly the Future Gas Strategy that was released by the federal government just a week or so ago did indicate a very important role and opportunity for Australia to provide that CO2 storage service to the region. We're very conscious that CCS is a critical technology to decarbonise our industrial sector. That's here in Australia, but also in countries like Japan. And we are blessed with abundant CO2 storage resources. So we're already progressing opportunities to be able to take that CO2 from countries like Japan and Korea and store it safely and permanently here in Australia. And that's part of our contribution to a global net zero target.
Samantha, just last question on gas prices generally, because they've dropped from the record highs that we saw going back to 2022, but they're still well above the levels we've seen over the past decade or so. So do those sorts of high prices risk demand destruction across the emerging markets?
Well, certainly we've seen a period of high prices following Russia's invasion of Ukraine. This was a global energy crisis. We had unprecedented pressures on LNG market. Those pressures have come off substantially still, but there is strong growing demand for LNG, and that's why here in Australia we feel it's really important that we get the investment settings right so we can contribute to the supply that will be needed to meet that demand and keep LNG affordable, reliable, because we know what happens when that gas supply is not there, that countries are shifting back to coal and higher emission fuels. So it's not good for economies, it's not good for jobs, and it's certainly not good for the environment.
That was Samantha McCulloch there, Chief Executive of Australian Energy Producers, joining us from the annual Australian Energy Producers Conference in Perth, and we'll have more from that event ahead. In the meantime, quick check on how markets are going so far. We're just looking ahead to the open of Sydney, Seoul and Tokyo, and you can see here in futures fairly range-bound so far, and that sort of sets the stage for what we're expecting in the session today. Quite listless trading because investors really looking ahead to those NVIDIA earnings and the last of the big tech to be reporting. But we did actually hear from NVIDIA and Dell CEO as well, saying the company's unveiling a new line of personal computers that are optimised for AI. That's optimised for AI tasks, of course. We spoke exclusively with Michael Dell alongside the NVIDIA chief Jensen Huang at the Dell World Conference in Las Vegas.
All our new PCs will be AI PCs, right? And the reason is that anything that you're doing that has an edit prompt is going to be sped up because every software developer in the world is figuring out how to use all this new power in the GPUs and the NPUs in these new AI PCs.
Neural processing units for the
exactly.
uninitiated.
So that experience will be better. So when your PC is now 4 years old, it's time for you to get a new one, right? You're going to want the one that speeds up those new capabilities. And inside your company, they're going to want to make sure you have that they don't want to buy a machine that's going to last for several years that doesn't have that capability.
Jensen, where is NVIDIA's place in the AI PC? I know you as gaming. That's, again, I grew up with the gaming side of NVIDIA. Do you have a place in the AI PC market?
Come back next year. There's exactly. There are a bunch of NVIDIA GPUs and Dell PCs, and Dell workstations. All of our GPUs have the same tensor cores that are running in H100s in the cloud. And so every one of our GPUs use AI to do its work. AI, of course, is going to transform gaming. All the NPCs, the non-player characters, they're going to be
Think
chatbots.
about development time, how it will be cut, for example.
Creating worlds is going to be easier. Instead of instruction-driven computing, it's now intention-driven computing. So it's easier to write programs. Python programs will be even easier to write. Video conferencing will be a lot better because of it. Yeah.
But what you did with Blackwell and other products is you innovated by saying, okay, let's combine GPU with CPU. Is that the next iteration for you in AI PC? You go, okay, here's the NVIDIA CPU that goes with it.
We want to support every CPU the world makes. And there are places that want x86, we support x86. Yes. There are places that prefer ARM, we support ARM. We just went to ISC, and the top most energy efficient supercomputers in the world are now powered by Grace hoppers. And so wherever it makes sense, we'll support the right CPUs.
Michael Dell and Jensen Huang there speaking exclusively to Bloomberg's Ed Ludlow in Las Vegas. Let's take a look at how US futures are coming along. And of course, there's really one story, and it is NVIDIA and the ability of this one stock, which ignited basically the entire broader rally, and whether that momentum can continue given that these expectations for AI, for this stock in particular, just keep building and building and building. And of course, this is really the main story that we continue to watch. A little bit of downside there when it comes to S&P futures. In fact, trading pretty flat at the moment. It is also a mixed picture at the moment in Asia as we get into the start of trading in about 5 minutes or so. We are seeing, in particular, a little bit more weakness really across the board, be it you talk about tech stocks or some of the industrials as well. This is Bloomberg.